Hey guys, Mike here. So, boy, what another nice day on Friday for quite a few stocks. UNH, which you guys asked about, and I'll cover in today's video. We'll definitely talk about that. I will show you what a moron looks like when they go on TV, and if I was that person's father, I'd ask him, why did you do that when they were talking about UNH? Because he looked like an idiot. I'll get your response on that one. We'll talk about Warren Buffett, 13F. We'll talk about Michael Burry's 13F, which is probably the most interesting out of all of them, what he actually did. And we'll go into some other stuff you guys asked about. But one thing that's interesting is we had OPEX on Friday, and I was telling members normally, and I'll cover this again tomorrow to make sure everybody gets this information. You have VIX expiration, they call it, which is where the VIX options expire on Wednesday, Thursday, somewhere there, but before OPEX. Well, about 4 times a year, it's after. So we actually don't get that until this Wednesday coming up. And that's when, I don't know, usually you'll see the market free up for its move, if it's going to have one, in either direction, all right? But that's when you normally kind of see that stuff. So let's just watch out for that. And again, I'll set all this up in tomorrow's video with some interesting charts. But I'll show you 2 today. You know, everybody keeps trying to short this market and short this market and short this market. Oh, if it can go down, whatever. How long can it go on for? And I'll show you 2 charts a day, which is what causing this problem right now. It keeps just grinding and grinding and grinding. And you think we're going, and it just keeps going. And I bet you money you probably have a clue what those are. But let's get into the first question. You know, I have some really good ones here. Would you consider opening a position on UNH? Dangerous, I know, but or go short? Could you cover UNH and what you're looking for next? Thanks, Mike. When you look at the chart, obviously a lot of people, you know, have already gone long on this thing at 255. They also went long yesterday as well, and there's a reason for that. So the risk reward is just too great to pass up on, to be totally honest with you at that point in time. Now you had a big move, so you just got to make the decision for yourself on that. But when you're looking at this, you're really looking to see when it's going to make a lower high. But this is what I was telling people on this fall, right? Like, you don't have to buy a falling knife. You can wait for it to start building out structure on those smaller time frames. And more importantly, you're going to get to a point, which we did on Wednesday or Thursday, excuse me, where it's just so oversold that it has no choice but to bounce technically. Okay, so that's what happened. It was a technical bounce. It's been a big bounce. And you can see here these volume gaps. It just kept hitting the tree branch and falling through, and hitting the tree branch and falling through. But again, so many people came in right there for sure. There's no doubt about it. And so, you know, I actually did open a position up, to be honest with you. But more importantly, I was also selling cash clear puts because they were so easy to do. It was unbelievable because the premium was so high. You can close them out for 89% like in 4 hours. It was insane. What I was talking about with market structure, you got to wait for this thing to form, right? You don't have to buy here. You can come up, start building out market structure, start testing it, and then moving up, right? Like, so again, this is on a 5-minute, then you switch to the 15-minute, then you switch to the 30-minute. And that's what this thing has been doing for the last few days now, okay? And so that's a good thing. And also, it came into that gap. And once you go into a gap, that's when you'll get these big surges. And we'll talk about this surge right here. Something happened right there. And UNH has been a unique one, like I told you. You see, the premiums on Thursday were more than SPY and QQQ combined. And I think they even led in like 0 DT options or something on Friday. And I could be totally mistaken on that, but I think that was the case, which, I mean, no surprise there at all. I know people are doing it right and left. And so when you look at this, normally kind of a cheat code for you, where we got up to that 50% retracement of the gap, the 50% fill of the gap, you'll normally get a rejection, which it did. That means it's not going higher. That's when you get pullbacks and stuff. But so far, what is this one doing? It's respecting its fib levels. As it's moving back up, it is respecting its fib levels. And so I just went from the swing low to the swing high up there. And you can see that's what it's doing. It's just stair-stepping right here. And if we were going to get a pullback, I'm not saying we are, this right here on the 15-minute, that would be a nice level to see you get a bounce from. All right, be good market structure, come down, mitigate that. It would give you a discount from the latest swing low to swing high on that 15-minute order block there. So that would be good, right? I mean, that would be a good one. Not saying that's what's going to happen, because again, right now the calls are just driving this thing up like crazy. I know people that are sitting there. They're buying the 620, 400 calls, all kinds of stuff. I mean, this is one of those meta moments. Remember when meta came down so fast, how fast it recovered? And so that's just the way it is. We knew they were in an investigation a long time ago. So the whole Wall Street hit piece, people already knew that, right? And when you look at the RSI, and this is what I'm talking about technical, right? You just go down to 1, 2, and 4 hour. Look at this. Got to 4, okay, on the 1 hour. The 2 hour came down to 5. The 4 hour comes down to 7. The daily gets down to like 11, for crying out loud. Guess what you're going to have? You're going to have a bounce. That's what's going to happen, okay? The weekly's oversold. The 2-week was oversold until this like little move up today right here. But I mean, that's unbelievable. I mean, the monthly, for crying out loud, not oversold, but it's the lowest it's been since '08. Okay, and so that's why it's like a rubber band. It's a snapback effect, right? So no surprise of what's going on there. And when you look at that big bounce I was talking about, it was right here. See the call options start flooding in. Drove it up from 275 to 293 very, very quickly. In less than 30 minutes, this thing popped. And what happened was it came out that some directors had been buying stock. And when we kind of zoom in here, what's funny about it is, look at this real quick. You know it was an old purchase because, not that old, but the price was $320. They bought 9,000. I mean, they've been buying in the 300s. This thing got down to 248. So remember that. So they're actually underwater right now as we speak. But any news is what's popping this thing. And I'm going to show you just a really brief clip of somebody who, I don't know why they did this. I'm assuming in hindsight they had to look and go, what am I doing on here? But this is why you don't listen to analysts. If you happen to know one you like that's accurate, let us know and I'll share it with everybody. But this guy ain't one of them.
Any other issue in any other part of the business, a Change Healthcare, another cyber hack would be better. Investors would still buy the dip. But for it to be Optum Health, that makes me very cautious, and that's my focus. And you mentioned outperform. That's what I'm looking for next, because clearly, the stock is down 50%. I've missed the downgrade potentially, but we're looking to do more diligence on Optum Health. And our price target has come down significantly. At one point, we're over 600 now. We're right around 350-ish.
I missed the opportunity to downgrade it. Went down almost 60% in about 32 days. Yeah, I think you might have missed that, champ. I mean, seriously, it's unbelievable. I mean, I would have, if I was his father, I'd been calling and go, why did you go on and do that interview? Did you notice the people around the table weren't even looking at him like this right? They were like, anyway, because they've all been there. I think almost every one of those guys has been an analyst at one time, and they're just always behind the 8 ball. Always behind the 8 ball. Oh, but we lowered our price target now. It's like, oh, well, thank you for that. We appreciate that. It's just crazy, man. I can't believe he came on and said that. Ugh. Anyway, let's go on to the next one here. It says, what was your take on Warren Buffett and Michael Burry's 13F filings in Q1? For those that hadn't seen these, you can see Warren Buffett, they really didn't do much. Remember, this is Q1, so it ended March 31st. We were already selling down the market. We didn't bottom until in April. And so interesting to see that, really didn't do much. I mean, they added a little here and there. They reduced some, definitely reduced their bank exposure. As you can see, Capital One, for example, and one of the others at the top right there. They love Siri. I don't know why they love Siri. We've all been trying to figure that one out. It'll be a penny stock if it wasn't for Warren Buffett doing it. They own a huge percentage of it, by the way. Reduced 48% in something called Liberty Media Formula. Added 10% in Heiko Corporation. Pool added 144%. That's another one that Berkshire Hathaway likes. Because remember, this ain't Warren Buffett doing this decision making, okay? Now the most interesting one was Michael Burry. This guy sold all his stocks, and all he has is Estee Lauder. You can see the value of Estee Lauder, and you can see the portfolio value. And then, of course, on top of that, he ended up buying puts on NVIDIA and then all the Chinese stocks. Remember, he held a lot of Chinese stocks. I assume he sold those, ended up buying puts on all these right here. And you think, well, that must be pretty good. And it really depends on when he sold them. But when it comes to trying to short the Chinese stocks, like, I don't know when he bought these things, but as you can see, this is Estee Lauder real quick. And obviously, he's rode this one down big time. And so I assume he's down this position, depending on when he bought it, of course. But when you go over to the puts, if he bought puts at the beginning of the year, I assume he made no money. I assume he lost money depending on when he sold them, because this is when Chinese stocks were going through the roof. And you see BABA, it went from 81 up to 140 right there, going all the way through, what was that, March 13th? So again, I think you had to lose money on this stuff, right? And I assume on NVIDIA he made money, because you see it's been tanking all first quarter, so that one was pretty good. Baidu, I assume he obviously lost money on this thing because it was just going up from 77 to almost $101 all the way through March. So I assume, I don't know if he held them. I don't know what he did. Maybe he's still holding them and he got all his money back on the drop. I don't know. But again, this is first quarter, so we don't know what they did in April. We don't know what they've done in May. So we'll see if Berkshire Hathaway deployed the cash. We'll see what Michael Burry did if he started buying stocks. So now he has more than just Estee Lauder. He does make very interesting choices. I got to give him that one. So let me know what you think about those two. But very interesting 13 Fs there. Now, next one it says, didn't Jim Carson, this is the person referring to, say the S&P would peak at 5,900, followed by a 30-35% pullback, It tried getting through 5,900 the past 2 days with no luck. Actually, what he said was the rally could go as far as 6,000, even maybe set new all-time highs, depending. Fed cuts in June, maybe July, and then third quarter-ish, somewhere in that time frame. The yields start to go through the roof, and the market drops anywhere from like 35, 45%. That's so far. I haven't seen him come out and change that. He's done a few podcasts here and there, but didn't really go into great detail or make any changes to his prediction so far. And I hadn't seen him tweet out anything like that. So that's the prediction. So we could go higher. I mean, it really just depends. And I'll show you something real quick. Let me get through this question right here, where it says, thanks, Mike. Great stuff as always. For me, the question is, what could drive some sort of pullback short term? Profit taking from retail. What bad news would it take? Have been holding off buying anything yesterday, today, hoping for some reprieve, but seeing some stocks moving 10% again today, kind of creating some FOMO. One thing is just making it tough right now is, remember, retail is what led this way up, right? And here's fund manager survey just came out from B of A. Look where they're at. I mean, the positioning, as we've seen all these different charts come out, if it's true, they're under. So what you're seeing is CTAs buying back in, having to chase to a certain level. Some of these funds absolutely have to buy. And so that's why you're not seeing these falls, and you're seeing all the dips get bought so far. And so this is true. And you look like after the after 08, they did pretty good in their positioning and being right where they need to be, right? It was during the .com and right there before 08 was disaster for fund managers. So they did pretty good about being a lot more long. But the other one is the short positions, right? So it looks like hedge funds are short. This is from Bloomberg. And you can kind of see where supposedly it's at. I mean, if that's true, like that's tough for a market to really start coming down, because when it goes up, they eventually have to start covering, right? And you got to think they probably covered a whole lot. So they might be reloading on this one. But when you see on that chart, you see some dips here and there, but on their shorts, but that makes it tough. And one thing that could cause a pullback, or just a simple pullback, we're talking about pullback, it's like 3, 4, 5%, like not like 20% or nothing like that. I'm talking about something like that, which is normal for a market. One thing that could cause it is simply the flows, as Jim Croson always talks about. OPEX is Friday, VIX expiration on Wednesday. That's usually kind of frees the market up to move around, okay? And so you could see just that kind of deal, and we come down and see what happens to the 250-week moving average, right? That could cause it. And of course, you never put anything past the president, because what's moved the market more than anything else right now? His tweets. That's just what it is. I mean, the biggest days we've had have been on his tweets, okay? And so, yeah, don't put anything past that. Our next question from Dr. Mark says, in many of your videos, you show charts showing, for example, how massive calls buying went on for Tesla, Nvidia, and stock. Is there a way to see these flows and call puts buying live intraday, or is it only show at the end of the day, or too late for us retail to take advantage of it? Another one says, how do you tell or measure, as you say, when calls come rolling in? Thanks. You can use Chatter Flow and use your wells. There's other ones. I use Quant Data, kind of been playing around with that one. And yeah, you see the clock right there, the top right, and it just changes as time goes. Usually update like every minute or something like that. You see the right things are moving. This is almost the end of the day on Fridays. Things are super slow. But again, I showed you UNH, and when that popped and stuff. And again, you see that big pop right there. You'll see pops and stuff here and there, and sometimes it's accurate, sometimes not. That was UNH right there. And especially when you see news pop out at the same time you're seeing that, yeah, sometimes you can use it as well. Sometimes you can't. It's just the way it is. But because sometimes you can't tell, is this hedging or is it actually just straight up buying? So, but yeah, I think any of those sites, I think you can follow them live for sure. Okay, hope that helps. Now, next here from Dr. Marks as well, he says, during times like this, with such volatility and uncertainty, what percentage of your portfolio is in cash, money market, high yield savings? Are you expecting another big buying opportunity, or are you already largely deployed? For me, I actually keep more cash on hand than I normally did before this year, because I actually started a different account where I just put a certain amount of money in there, and that money is just used to sell cash secured puts. And then if I get assigned, I sell covered calls, but I'm not trying to hold stock in it. And so I'm actually trying to get assigned on the covered calls. I only got assigned once so far, and that was on Tesla, and then it went up, so that was actually good for me. But, and then UNH, I've been like ringing like a freaking cash register. That thing has been unbelievable, trying to learn to take advantage of these massive drops in these stocks, and the premiums shoot up, and you can close them things out so fast, like in the same day. And so I'm trying to master that, or get good at it, come up with a system where I can use in retirement. And so I don't have to draw on our retirement as much. If I can do that, there's people out there that do this for a living. They have like $250,000 accounts, and that's all they do. They don't bother buying calls. They don't do any of that stuff in that account. And so, because you're odds of winning when you're selling versus when you're buying actually are higher. At least that's what I find for sure. Because when you're buying, like say you buy a call or you buy a put, you need it to go in one direction. When you're selling, it can go in all three directions as long as, again, if you don't want to get assigned, you don't want to come down to your strike price or below before the assignment date. So it can go sideways, it can go up, it can come down. As long as it don't come down to, like if you're selling a 240 cash clear put on UNH, as long as that thing come all the way down from 290 to 241, as long as it's not going below 240 before the expiration date, you're good to go. You still get to keep all that premium. If it goes up, great, you get to close out even sooner. If it goes sideways, cool, you're fine, right? So big difference on that right there. I think we always forget there's someone on the other side of the transaction and stuff, right? So anyway, but no, I showed people what levels I had on certain stocks, did members videos on it a couple times. If it hit, I bought. If it didn't, I didn't, right? So do I still have cash to deploy? Yeah, sure. I mean, this recovery has been super fast, right? And so we'll see what happens if we do get a dip. If it gets bought up strongly, we'll have to see, right? That's what we got to look for. So yeah, that's where I'm at. Let me guys know where all you guys are at for sure. And so next question here comes from Tom. Mike, do you think companies like Walmart will put modest price hikes on all their items to distribute the tariffs more evenly rather than hike up individual items? I think Walmart's one of the greediest companies I've ever seen. I think they'll do whatever they deem necessary, okay? I think they'll do exactly what they did. If there is any kind of increases on those tariffs and stuff, they already, like China already said, they already try to reach out to their distributors over there and pressure them into lowering prices. And so when it comes to Walmart, it's not like they can pass a lot of it on because the margins on grocery and stuff are usually pretty small on their big ticket items, bicycles, things of this nature, grills, all that kind of stuff they sell, makeup. Obviously I'm sure they could push those higher, so they'll probably concentrate in that area, you would think, because it's hard to push bread and all that stuff up. But you saw what happened to the prices of eggs. But obviously, for those who don't know, like they said the other day, they're going to raise prices because of tariffs. Okay, because the tariffs are because they get a lot of stuff from China, so a lot of that's going to impact them. So we'll see how that goes. The last question here says, is the Fed more likely to raise interest rates or cut them long? I actually laughed when I read this question because can you imagine the Fed raising interest rates right now? I mean, come on. It took them forever. We at 7% like inflation when they finally raised the first time. And so, no, I mean, it's all about either cutting or staying the same. They are not raising rates. Even if they needed to raise them, they would not raise rates. There's no way right now. Now what you got to see is if like now that Trump's pressuring, Powell to actually cut rates. And remember, he can't cut rates. It is a committee decision. I don't know why everybody keeps thinking Powell's got all this power. He can just override everybody on that committee. That's not the way it works, right? And so, we got to see, because now he's put in a position like, well, if I cut now, people are going to say I just folded, right, to Trump. And so some people are saying, well, he's holding it steady now more than ever, just to not look like he's, got no backbone or something. Plus, of course, they don't want to get burned after the foolish call they made the first time. They kept saying it's transitory. They were late to the game. And then, of course, what happened? People keep forgetting they've already cut multiple times. What happened? The 10-year went up, inflation went up. And so they're also kind of knee-jerk reaction to that as well. And so the biggest name in the game now is going to be employment and retail sales. Like, do you see more softening in either one of those areas like that? I think they'll probably look at a lot. And plus, they still don't have the inflation data because, remember, these tariffs haven't even kicked in yet. They're kicking in like April, May-ish. And so we need to see, as this stuff starts to flow through, what happens. Because remember, a lot of people held either canceled the orders or held those ships off and dry docked them and stuff, right? So they wouldn't take the stuff in. So now they start to bring everything in. That's when we finally get to see it, right? And there's supposed to be a lot of ships selling from China now as well. So a lot of orders started going through. So we'll see what happens on that. Plus, everybody's putting their Christmas orders in as well. Got to put that way in advance. So again, we'll see. It's going to be fun times, to say the least. Let me know what you guys think about all that for sure. Put any more questions you have for next Saturday's video. Tomorrow we'll set up for the week, of course, and see how that goes. Should be another fun one. And on the way out, please hit that like and subscribe button, guys. Hope you guys have a great rest of your weekend. Think about signing up for the membership. Less than McDonald's combo. And I'll see you guys tomorrow.